Alright guys, doing a tutorial for Hawker's Hamburgers. So here is the task. Everyone should have a copy. The question itself doesn't have. It tells us that we want to depreciate using diminishing balance for the first two vehicles, but doesn't give us a rate. So I said 25%, and I'm pretty sure everyone should have a copy of one that says rate 25%. Okie doke. So let's get into this. So in the exam, some key things: read through the question. You want to highlight whether it says including or plus GST. Okay, this one has a combination. Okay, so we need to look out for that. And also take note of when the question wants us to go up to. Okay, this one wants us to depreciate up to 30th of June 2015. Okay, so the first asset's bought on the 1st of November 2012. So that means we're dealing with the 2013, 2014 and 2015 financial years. 1st of November 2012, Hawker's Hamburgers purchased the vehicle on credit with Rego 909 HMD from Hatchin Motors for $22,000 including GST. Okay, so we're going to divide this by 1.1 and the cost of the vehicle is going to be $20,000. On the same date, aircon costing $1,100 including GST was installed and paid for by check, and annual insurance was paid for $825 also including. This was paid for by check. The estimated life of the vehicle was 4 years and residual was estimated to be $8,000. Decided to use diminishing balance, rate 25%. On the 1st of January 13, the firm purchased a second vehicle from Hatchin Motors on credit again at a cost of $24,000 plus GST. Okay. Insurance cover for this vehicle was $800, so that'd be annual insurance. So it's an expense, so revenue expenditure, not capital. Estimated life and residual all the same as this one up here. So residual $8,000, estimated life 4 years, and we'll use a rate of 25%. On the 31st of October 14, the vehicle was involved in an accident, disposed of for cash, $14,000 cash. Okay, plus GST. So then we'll do the disposal for that, and then we'll go and do the purchase of a new vehicle, calculate the depreciation. Yeah. So construct a worksheet outlining the price. Okay, let's be clear, in the exam you don't have to construct it. You'll be given all of the templates. We just need to fill in the details. Show all journal entries necessary to record this information to the end of 30 June 2015. Clearly identify the years for each transaction. Prepare the following ledger accounts. Remember, we're only doing 3. Okay, motor vehicle, accumulated depreciation, and disposal. Show how the balance sheet would appear for the non-current asset. Oh, boats. Should be vehicles. Anyway, typo there. I'll say this at the start of this video. Okay, for the 2018 exam, I've just recently changed it. We're not going to be doing the balance sheet. Okay, I'm going to do it for this question, but I'm trying to shave time down of what's required in your exam, so you will not be showing it on the balance sheet. I said the other day, it gave you some tips how to quickly do the balance sheet to try and get yourself some extra marks. Okay, but in order to cut down on time and stuff that's required in the exam, we're not doing this. So in other words as well, you need to be strong with your journals and strong with posting to your ledger. Okay, let me know if you have any questions and email me and whatever. Let's get cracking. Okay, so PPE register number 1, we're going to call this 909 HMD. Okay, we've got business name, Hawker's Hamburger Delivery. Supplier Hatchin Motors. Estimated life was 4 years. Depreciation rate was saying 25%. Serial number we don't have. Date of purchase 1 November 12. Residual we're saying was $8,000. and we're saying diminishing value. Okay, so date equals, date up there, go and grab that. Motor vehicle original cost, it's saying 22,000 including GST, so divide 1.1. Okay, so $20,000. Then we've also got air conditioning. And it was 1,100 including GST. Auto sum that. Gives us $21,000. Okay, so years 1, 2, 3. I'm going to tidy up the formatting here, align that to the right. So for our first year, our from date naturally will be our purchase date. And then we're going to go to the first 30 June after that purchase date. So it's going to be 30 June 13. Oh. Okay. Then we're going to go 1 July 13 to 30 June 14. So all of the next financial year, and then the next day, start of the next financial year, is the following day, 1 July 14. And then in our question, and just double checking, did we sell this vehicle? 999, okay. In the solution that I just sent everybody, I've disposed of 99 HMD when I shouldn't have. So it's going to be owned all the way through to 30 June 2015. So 30 June 15. Okay, our months, our formula equals round, double bracket, 2 minus from, close bracket, divide 30, comma 0. Practice it again if you need to. Round, double bracket, 2 minus from, close bracket, on 30, comma 0. Okay, I'm just going to copy that one down. Okie dokie, so depreciation equals double bracket, so it's diminishing balance, so it's diminished balance times rate, close bracket, times, oh, probably didn't need a double bracket, did we? Times 8 on 12, close bracket. $3,500 accumulated equals 3.5 because it's the first year, and our balance equals the original cost minus the accumulated 17,500. Depreciation in the second year equals, open bracket, our diminished balance times rate, and then times by 12. Bit of a redundant step because it's the full financial year. Accumulated equals 3.5 plus 4,375, and the balance is 21 minus accumulated depreciation. And how about if we copy this one down here, double click on it, move that up, it's referencing this cell here correctly, enter, 3281, accumulated depreciation is correct. Copy this one down here as well, double click on it, move it up to the 21, gives us that figure there. Alright, so that's 999 HMD. Let's move on to the next one. This one's 555 HRE. How about it? To cut down the time, we should be going equals that. Okay. So this is vehicle or motor vehicle. Supplier was Hatcher Motors again. Estimated life. So this is all the same as the previous vehicle. So 4 years, 25%. Date of purchase is 1 Jan 13. Residual, same as the last one, so that's $8,000. Depreciation method, diminishing balance. So our date is our purchase date. Vehicle, motor vehicle. Original cost $24,000 plus GST, so that means the GST exclusive value is $24,000. For the rest of the question, we don't have any capital expenditure to add on to that one because we've just got annual insurance cover. Yep, so that's it. So we've got, let's just say year 1, 2, and 3. Let's see how we go here. I'm just going to align that to the right. Our from date is going to be our date of purchase. Then our to date is going to be the first 30 June after that purchase date, so it's going to be 30 June 13. And then year 2 is going to go from 1 July 13, the next day, to 30 June 14. Full financial year for year 2. Then the next day, first day of the financial year, 1 July 14. Now this one here, 555 HRE, was sold or disposed for $14,000 on the 31st of October 2014. So our to date here is 31 October 14. Months equals round double bracket to minus from close bracket on 30, 0. Copy that down. So diminishing balance equals bracket 24 times 25 close bracket times 6/12, $3,000. Accumulated for the first year is just that there. Balance 24 minus the 3. Okay, in the next year equals, we'll open a bracket, our written down value or diminished balance times rate times 12 on 12. Redundant step, but we'll put it in there anyway. I'm just going to get my formatting consistent. Accumulated depreciation equals last year's plus this year's, therefore our balance becomes 24 minus 8250. Okay, and then for this year, you could just copy this down, double click, move that up there. It's referencing this cell here correctly, so that's fine. Referencing that cell there correctly. Enter 1313. So accumulated equals last year's plus this year's. Our balance equals that minus accumulated. 14438. Just going to save that as I go. PP3 is 777 HXP equals Hawker hamburger delivery. Okay, so this is a vehicle. Supplier. I don't think we're given a supplier for this one, so we move on. Estimated life. This one has 5 years. This one's using straight lines, so we're not given a diminishing rate. Date of purchase 1 November 14. and residual they're saying is 9,500. Okay, so date of purchase would be that there, and we bought it for 29,000 plus GST. So our GST exclusive value of the vehicle is 29,000. Advertising, okay, on the same day the firm paid $550 cash to have the business name painted along the side. Now that's not an improvement to the vehicle, it's not extending its useful life or anything like that, it's advertising for the business. So we're not going to include that here as capital expenditure. We're going to put that into advertising expense. So this is our original cost of our vehicle. Okay, so we're going to go years 1. Our from is going to be our purchase date. Then we're going to go to the next 30th of June. Okay, and 30th of June 2015 in this task is all we're going up to. Okay, so it's just going to be the 1 year equals round, double bracket, 2 minus from, close bracket, on 30, comma, 0, close bracket. We've got 8 months. Depreciation using straight line, so it equals, then we'll go double bracket here, cost minus residual, close a bracket, divide 5 years, and then times 8 on 12 months because we only owned it for part of the year. 2,600. First year, so accumulated is 2,600, and our balance therefore equals that minus that. Okay, so there's our 3 vehicles. Let's crack on and do our summary. So in order to do our summary, what we'll do, we'll have a new window and split our screens. Range all, vertical. Okay, get the summary going over here. So we've got 3 years. We're doing 2013, 14, 15. Okay, we can go 999 HMD, 555 HRE, and 777 HXP. We copy that, put that over there as well. Alright, 2013 year. We owned 999 HMD, so we can go, we want the original cost, 21,000. 2013 year as well, we also purchased, if I'm not mistaken, 555 HRE. So that's the 1st of November 12. Hang on, no, sorry, my bad. 1st of January 13. Okay, so we owned that one at 30 June as well. So we put the original cost in there, 24 grand. So yearly total. We go home, auto sum that, we can copy that down that way. Okay, we owned 999 HMD still at 30 June 2014, and same with this vehicle here. And then 2015, we still owned 999 HMD, so we can copy that down as well. Don't need that formatting there. However, 555 HRE was sold in the 2015 financial year. It only goes to the 31st of October. So at 30th of June 2015, we don't own that vehicle, so it's left blank. However, on the 1st of November 2014, we bought 777HXP. So at 30th of June 2015, we owned this vehicle here. So we get its original cost and put it in there. Alright, so then over here, 999 HMD. This process is pretty simple. We want the depreciation from each year, so we can just go equals 3.5. Copy that down, just like that. Get rid of the decimals. We're not doing any decimals in this task here. Double check that they're all the same. Yep. 555 HRE. Okay, so we want all of these. Equals 3000. Copy that down. Get rid of the decimals. And then HXP equals this figure here. Okay, yearly totals, auto sum, copy that down, accumulated, first year equals that, second year equals that, plus depreciation for the year. Alright, and then for the last year, accumulated depreciation as at 30th of June 2015 is going to be accumulated depreciation only for the vehicles that we own. So if you recall, we've sold this one, so accumulated depreciation is only going to be on this vehicle and this vehicle here as well. So we can go equals, there's a number of different ways that we can get that value, but equals that plus that minus sum, open bracket, and close bracket, 12163. We can double check by selecting all of those three and that one there, hold down the control key. So select these three here, hold down the control, and select that one there. We look down the bottom, and it's not adding up. So what have we done wrong? Accumulated depreciation. Oh, sorry, we're getting rid of this vehicle here. Right, that's probably going to be a little bit better. Highlight these, control 13756, 13756. Okay, so our accumulated depreciation at 30th of June 2015 only has depreciation for this vehicle and this vehicle, because as at 30th of June 2015, we will be doing a journal entry to send all of this accumulated depreciation to the disposal account. Okay, so that's our depreciation up to the summary page. I'm going to leave the video here. That can be part 1, and I'll do a part 2 video for the journals and the ledger. Over and out.